Today we've got Oufa from London showing us how he got his payout with his simple strategy on the 1 minute chart. That's right, the 1 minute chart. So I hope you guys are ready to learn and let's get started.
So, Offa, talk us through two traits that you take in and whatever you thought about.
Okay. So usually when I start my analysis, I start on the daily time frame. In
Okay.
as much as I say I trade on the 1 minute, I try to trade in conjunction with the daily time frame. However, it
Nice.
depends on the market phase. It depends on what the market is doing. That determines my style of trading. Yeah, I know I gave a lot of props to ICT, but it doesn't necessarily mean I don't use other retail concepts. I actually combine all of them. You know,
Make
so
it work for
yeah,
you.
yes. So, but for these particular trades, I focused more on ICT fair value gaps. So usually, if you see my daily charts, I sometimes annotate them daily higher high, daily higher low like that. So basically, I'm going to show a trade from July 23rd.
Hmm.
Yeah, and I start with the daily like this, then I drop down to the 1 hour because this trade I actually traded ICT fair value gap. Just a minute, I need to adjust this. Yeah. So I drop down to the 1 hour. The markets were a lot in consolidation at that time, and fair value gaps many times do not have directional bias,
Hmm.
or you can also trade it very well in conjunction with directional bias. It all depends. So I'm going to show you a typical example where I took two trades in opposing directions on the same day. You know, um, yes. So I go to the 1 hour, and this is a trade I took. Let's see. Yeah. So on this day, I start my mornings. I try to trade London. I trade New York sometimes, but mostly London. So yes. So this was on a Monday,
Hmm.
and I use the vertical line to denote my times because ICT emphasizes on time and price. So I start hunting for fair value gaps from 7 a.m. London time, which I believe is 2 a.m. New York time, if I'm right.
Hmm.
So yeah.
Yeah,
So
it's
once it's
5.
yeah. So by 7, I I draw a vertical line for 7, and
Yep.
then I also denote my timings, 8 o'clock, and sorry, just a minute,
Okay.
8 and 9.
Cool. So each on hour.
Yes, yeah, 8 to 10. I'm looking at the London Q zone
Okay.
here. So then I drop down to the 15 minutes. Then I go to the 15 minutes. And then on the 15 minutes, I look for swing highs and swing lows.
Right.
So yes. So this would be the typical 15-minute chart on that particular day.
Yeah.
And I look for swing highs and swing lows. So this will be the swing low.
Hmm.
Sorry, just a minute. Yeah, 6 o'clock. I'm trying to ensure my timing is all right. 7. Okay. I have to adjust the lines a bit so I can see properly.
Yeah, that's fine.
Just yeah. Yes. So then I draw a vertical line. This
Yep.
is a swing high,
Yep.
on the 15 minutes. Usually for fair value gaps, Once is 7 o'clock. Remember, now I'm sorry. This is a swing high. A swing high, according to ICT, is a high that has a higher low to the left side of it, and a higher low as well to the right side of it.
Yeah.
So this is a typical swing high, and we start hunting for setups from 7 o'clock, 7 a.m. London time. So this is 7 a.m. London time. So after that, I'll delete this line. Yeah. So once it's 7 a.m., I am trying to see if price will go above the swing high.
Gotcha.
So what I do at that point, I drop down to the 5 minutes, 3 minutes, and 2 minutes. Unfortunately, I do not have a lot of history, to go back to the 1 minute. I take my trade a lot on the 1 minute. So I'll just quickly show you the 1 minute chart and show you what happened at that point in time on that day.
Let's do that. Okay, cool. So you got your 1 minute chart here. So these were from that trade on the 24th or 23rd? 24th.
24th, yeah. Sorry, 24th. That was a Monday. Yeah. So, and I also noticed on Mondays are a little bit tricky to trade. So many times, many traders avoid Mondays. You see many traders on YouTube saying, I don't like to trade on Mondays and Fridays.
Yeah, that's me.
I actually love to trade on Mondays and Fridays because with a fair value gap strategy, most of the times the trades are on point. In fact, the trade I took for my payout, I traded it on Monday, and I like Friday trading as well. So I can trade, all times. That's the advantage of learning under ICT actually. Yeah. So on this day, I hope you are able. I mean, the audience is able to follow my trade because I just have to use the screenshot to
explain. So you got the swing high, which was identified. Then from there,
exactly.
you had the fake out, and then 7.
Yes. Yeah. So once it's 7, if you notice here, I don't know if you can see my cursor. This is 7 o'clock. If you notice, before 7, we got this was the 15-minute high, most probably that we're looking at. So by 7 o'clock, I start to hunt for fair value gaps on the 1 minute. So what I've done here is to duplicate my screen. I normally duplicate my screen into 3 minutes and 1 minute. So that I'm simultaneously seeing what is going on both sides. So once we have hit that 7 o'clock, like I said, I've earmarked my zones, which is denoted by the vertical line.
Yeah.
Is this the horizontal, right? The horizontal line.
Horizontal line,
yes.
Correct.
Yes. So what I do is I wait, for a break of that horizontal line. And many people will think, price is actually going higher. I'm actually looking for a reversal, in price. So once I see this break, price has gone above on the 15 minutes. That's when I drop to this 3 minute and 1 minute chart, which I'm looking at simultaneously. I also look at the 4 minute charts and 2 minute charts, but on and the 5 minutes as well, but that's on my system. But mostly I focus on the 3 minutes and 1 minute side by side. Yeah. So I'm looking for fair value gaps. I'm first looking for, of course, above the 15-minute chart, above the horizontal line is buy side liquidity. I'm looking for buy side liquidity to be taken out, to be taken out, a run on buy stops. So once this is taken out and price starts to drop on the 1 minute, what I do is I try to identify a change of character or a break in market structure. So what you would have noticed is that on the 1 minute, if you look here, price was climbing, and then suddenly we have a swing low. Remember, I talked about a swing high as having a higher low to the left of it and a higher low to the right of it. Same with a swing low. Look at this. This is a swing low. I hope you can see my cursor.
Yeah, I can see it. So yeah. Sorry, I'm nodding. You probably can't see me nodding. Yeah. It's so you can see you've identified it as broken through the resistance, which was the swing high that you identified at 6, and then you're breaking through. Yeah.
Yes. So I'm looking for the swing lows on the 5 minutes, 4 minutes, 3 minutes, 2 minutes, and 1 minute. But many times I just focus on the 1 minute. So this is a swing low. Price has broken structure, like we said, and now if I see A swing low is a low that has a higher high to the left of it and a higher high to the right of it. Once price breaks the structure, that means there is a change in structure. And what I do is I take my Fibonacci from the low of the 15-minute chart, the low that caused that swing, that motion, from that low to the high. The high would be the high of this, where you can see the stop, where it's written stop 0.006. That will be the high on the 15-minute. And I'm looking to trade to discount. Anything above 50, this is the Fibonacci 0.5, 50%. Anything above the 50% is a premium market. So I'm looking to trade back into discounts. So anything below the 50% Fibonacci level is discounts.
Gotcha.
So
So that's how
and
you
I'm also looking
identified
for,
your take profit.
yes, that's my take profit. That's what I'm looking to take profit. I'm also
Gotcha.
looking for fair value gaps on the 15 minutes. That's a gap, what you just call a gap. I'm looking for fair value gaps. This would have coincided, with a gap on the 15 minutes, on the 15-minute chart. A gap is something like this. You can see where you have a huge swing in price, and there is no corresponding price that comes back to fill it up. You'll see that on the 15 minutes as well. So when I have a break of the structure in 1 minute, I'm also looking for a gap. Once the gap is identified, I'm waiting for price to run back into this gap. Then I take my stop just above the candlesticks that broke that low. So once that is done, once price runs into this, you can say, if you look at this, I used a stop of about 6.6 pips. So sometimes I use a stop of 3 pips, 4 pips, 5 pips, 6.6 pips. It's advisable to widen your stops, especially if you have not back tested a lot. You might want to enlarge your stop above the entire structure. But to get a better risk to reward, then I just use my stop above it. So once price comes back into this gap or into this fair value gap, I I'm looking to take price down into discounts. So I take my trade from here, and price, if you notice, price keeps dropping and it drops into discounts, and then I take my profit there. So
Nice.
this would have given me a risk to reward of 3.77,
Nice.
3 times my risk, basically.
Nice and simple. Well, it was simple but not simple, but it was explained simply as well from there.
So guys, I hope you guys are learning and earning so far. If you want to get started on your funded challenge, there's 15% off. That's right, 15% off. Link in the description below for no time limit, 2-step, 1-step. You can actually have add-ons as well. So remember to get your challenge, link in the description below. Let's get back to the video.
Nice. That was nice and simple on that trade breakdown, and it was quite good. I love how you kind of identified your swing high, swing lows. You have your vertical line to identify your actual time zones, and then when you're actually trading in that time zone from there, and then from there you're using the Fibonacci's to have your take profit and stop loss potential areas from there, and then you ran it, and then you got your take profit. So
Yeah.
you got your payout as well. So massive,
Yes,
massive
exactly.
congrats. So, bro,
Yeah.
I really, really appreciate. Thank you very, very much for coming on today's interview. It was inspiring. It was funny. It was an emotional roller coaster up and down of happiness and learning from blowing accounts, which I think was a lot to learn from. Then we went through your breakdowns of your trades. As an overall, before we kind of wrap this interview up, is there anything you want to say, or people can follow you if you have socials? What would you like to finish up on?
Okay, first of all, I would like to tell every aspiring trader, and every struggling trader, the first thing is never to give up. The moment you give up, then the dream is gone.
Yeah.
Failure is not an option. Consider failure as learning opportunities. Every single mistake or failure you come across gives you a lesson to learn. In fact, you learn better from failures than from wins. Like
Yes.
you talked about excitement. Most times you're just excited. You're not, going back to look at, okay, what did I do right or what did I do wrong? But every time you fail, the pain of failure makes you to, think outside the box. So if
Strong.
you're failing, just see it as a learning opportunity, as a step to success, and not failure in itself. The more you just cannot afford to give up. Keep trying, keep pushing, and you'll certainly get there.
Woo! Hey, speaking some facts. So the only traders that fail are the ones that give up. So never give up. Keep learning from your failures and succeed. Failures are a part of success, not the opposite of success, which is what I always say. Do you have any social media? Do you want people to follow you, or are you just happy
Oh,
being
yeah.
private? Some
Well,
people
right
like
now,
private, but
yes, right now I'm not too big on socials, but you could probably see me on Instagram, Aula underscore London,
cool. We'll put that in.
AULA underscore London. Yeah,
AULA_London. Perfect.
yeah.
So thank you so much for your time today. I hope you enjoyed it. I know you said you was watching it, you was once watching it, now you're in it and you're giving the value. And I'm sure we'll have you back in the future as well once you've done more payouts.
So guys, hope you guys enjoyed the video, learning and earning on these chart breakdown videos, which is super cool because we're learning how people make 18,000, 50,000, 100,000, 2,000, 1,000, and we can collate all this information to learn and earn to help improve your trading as an overall. So remember to like, share and subscribe, follow us on our socials, and we'll see you in the next video. Champ out. Peace.